What up, investors? Ken here from Dyslexic Investor. We're going to be looking at two stocks today. We're first going to be looking at Uber, and then we're going to be looking at Activision Blizzard stock. Both reported earnings today. Both are slightly up after hours. Uber's up slightly more. Currently looking at like 39.80-ish level, closing at 37.09. We're still reporting losses on Uber. We're going to be diving in some of the fundamental numbers, but then we're going to be looking at the chart as well, because that's what I mostly do, is the technical analysis on stocks, and then we're going to be doing the Activision Blizzard. So let's go ahead and pull up the full-on earnings report from Uber here. We're looking at some key points they actually highlighted. Uber's revenue growth picked up in the quarter. Not over the year. They lost well over $1 billion the quarter. A lot of it coming from having to pay driver incentives for the ride sharing and then also the Uber Eats. They laid off hundreds of employees in marketing and recruiting within the Uber Eats and the Advanced Technologies group. Among others, in October, I forget exactly, they laid off 400 or 500 people. So that's a pretty sizable cut in a company, no matter what your size is. But that cut a lot of expenses because salaries is usually one of their biggest expenses. But in Uber, I think a lot of their other expenses is just paying the drivers, the referral stuff. The stock was kind of mixed after hours. We can kind of see here, this is early morning, so this is 6 o'clock the following day. Overall showing, you can see here, not as big as of a drop, but we're still down nearly a little over $1 billion in the quarter. Overall the year, losing money. It's crazy at how this stock can perform, showing that on how much money they lose, that people still want to invest in it. It just truly shows that they're literally paying for their forward potential of what it could come. This is the key kind of fun, cool part that I saw, that the year subscription. So the 2020, I don't know how to pronounce the CEO's name. The CEO of Uber, Kushner, this guy right here, highlighted it right here. He's saying that they're going to be doing a subscription service, different various subscriptions for people who use the Uber Eats or Uber ride sharing, and they're going to be sold in the sense of like the higher volume individuals, and this is going to just help create that reoccurring revenue rather than just paying these really small fees each and every time and just kind of having a bank of these subscription fees. So it's kind of being easier to create guidance, easy to project numbers, and much easier to understand on where there could be issues on the sense of figuring out if the business is successful or if this is going to work or so forth. They did sell their company, their Uber Eats, to a company in India, which was that got rid of a lot of debt and a lot of issues there. They do say that Uber Eats is still in the fourth quarter that reminded shareholders now that it's the most downloaded app globally in two categories: ride sharing and food delivery. So I think this is what they're trying to stand on their box of like, listen, it takes a lot of money to get where we're going, but we are the number one in ride sharing and the number one in food delivery. And we're going to continue to be that way until we can figure out how to make it profitable. That's interesting for sure. I would love to see them do this. Again, I'm not a huge component. I don't use Uber on a daily basis, but I have in the past. But I'd love to see on how where this goes and so forth. So on that note, let's go ahead and I'll go here, pull up the chart. All right, so Uber, as we mentioned before, they opened up last May of 2019 at like $45. Within the first couple of days, came crashing down to like 36 or something, and then over the longer term, came all the way down to 25.58 down here. we did a couple videos. I'll post them. You can look up that we created a trend line from basically, we can just draw it again from here to here. And once it broke down in this area right here, when the purple line crossed over the yellow line with a lot of momentum and a lot of volume, as you can see here, this was towards the December timeframe where the former founder and CEO was going out saying he was selling all his shares. I believe Goldman Sachs was saying they're selling all their shares as well in 2019. And then it just got rid of a lot of, I want to do the air quotes, baggage, and it just kind of ran up from there, breaking through its 200, and then kind of building up here slowly here. That being said, technically, the moving averages are moving in the right direction. This is definitely a 100%, once you break into this area here, this was a trend reversal in the short term. Because again, the stock hasn't been out for too long, so if you can go in the weekly chart, you can kind of see like almost like a V-shaped bottom here. And I have a couple alerts here, so we should break through this 39.09 today when it opens up. And I would love for it to kind of build a base up. Probably like, let's just do this. We can draw basically up in this area. I would love for it to build a base in here and then potentially pop higher to try to test the 42 level and then test out like the 45 and so forth, go from there. Let's go ahead and look at the volume indicators. Again, mostly during earnings seasons, you're going to see a lot more volume. But you saw a couple spikes up, and that was due to the former founder selling his shares in the open market. The volume has been pretty stagnant. It's been up more than it was in the previous quarters. You can kind of see here it's been a little more volatile. I think more people are just willing to buy in because they're like, oh, $25, like that seems cheap. It was $45, like. And so forth. So we want to go look at the standard deviations here. Nothing crazy out of range here. So this is again the standard deviation. This is the medium, first, second, and third. So red is usually an indicator of extreme moves. Just looking at extreme moves, we can look at Tesla Motors real fast. These are extreme moves. Like these are the bars are way outside the 3 deviations, and yeah, once they break out of that, 99% of the time they need to come back in. They need to consolidate. Let's go ahead and back to Uber. So again, if we open up, we're going to be around the 30.50 level-ish, 39.50. It's going to be within the standard deviations there, without a doubt. But again, like I said, I want this chart to kind of open up and have create a base. I don't want it to completely run off. This would be a potentially buying opportunity, but keeping it on a very short leash of basically if it breaks down below like the 35 level, if you bought in around like 38.50, 39.50, you want to keep on a very short leash, maybe even shorter on like the 37 level if you want to do really short term. I normally hold things for a month to 6 months, maybe to years, depending on what it is. But that being said, be very careful with this because again, the market's been kind of a little and right now the S&P 500 is down about 0.4%, and it kind of been feeling toppy and frothy, as some people say it.
Wow.
All right, so we just covered Uber there, so let's go to Activision Blizzard, which I love video games, and this has been a wonderful little stock since we picked up, I believe around like the 40 some odd dollar level. This was, just to give you a better perspective, like this thing fell from grace of basically from $84 in like 2018 and just came crashing down, like just horrible earnings of just giving horrible guidance, not really having any new IPs or new games coming out, and just having to let go people, had a lot of expenses, and they're saying crashing down to $39. And I didn't want to catch this falling knife. I've always wanted to get an Activision Blizzard, but I never had the opportunity. And then once this opened up, I was like, oh, hello. It just came crashing through. This is on a weekly chart, mind you. These are all just each of these bars are a week, and it came crashing down. I didn't buy into like right around this area here, at like 47 level, when the purple line, which is the 8 exponential moving average, crossed over the 21 in this area where it was starting to consolidate. And then we had some good news, earnings pops, and then ever since then been kind of slowly grinding higher. They don't pay much of a dividend. They pay a special dividend sometimes, the 37 cents. It looks like they're going to be paying a dividend sometime in April 14th, 41 cents, which is nice because I own a pretty sizable position in this, the portfolio. But I want to make sure I keep this on a somewhat tight leash. I really want it to ride up the blue line, or the yellow line here, like it has in the past. I don't want it to be 2 or 3 days below it, because that could be a trend break, as you can see here. So this was below it, and then bye-bye. So that was, I want to kind of keep this on a short leash, but I love playing Overwatch and all their games that they offer at Activision Blizzard. So moving forward with Activision Blizzard, again, this has been a long-term hold. I think they're going to be the leader in esports. They're one of the greater video game companies out there. Great following, great support. I think that they will have a fantastic coming years. Again, I'm holding this for years, not so if I'm discussing about this, I'm usually much longer term on this position than I would be in Uber, which I'm not currently in Uber. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor. If you have any questions, please put them in the comments down below. Again, this is Ken. Catch you guys on the flip side. Peace.